600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. We're going to take a look at the markets that we usually do at this time of the day, but before we start, as always, I need to stress that trading financial markets unfortunately is risky and we may lose all of our invested money. As well, if you're trading with leverage, you may actually lose more than what you invested, so please bear that in mind. For more on this, click down here for the risk disclosure statement. Okay, we'll just begin, and we're going to begin with Euro versus the USD. And when I left you guys last week, because I was away on Thursday and Friday for some time off, I said that up here traders would most likely sell and then try to push the market to the downside. That played out fine, and following that the market bounced. Now the market bounced and we moved all the way up, more or less up to 116.88, and I think if the market would revisit this high and maybe even try to take out this high here from last week, I think traders are still gonna try to sell here with stops on the other side here at 118.53. The alternative, which is something to think about, is what if we trade below the June low? That would be interesting as well, and probably even better to some extent, a better setup, because the market bounced here 3 times already, so it's a little bit sort of telling us it does not want to trade much lower than the June low. Now in the long run, I still think that this market is bearish. That otherwise I would have not said that I suspect traders are going to sell up here, and I do think again they're going to try to sell up here, and that this market will most likely continue to move to the downside as long as trade below 118.53. Here's the price of Bitcoin, and the Bitcoin traders obviously a bit excited over the last little push from the low here all the way to the high. It's a 9.9% gain, which is well, it's something. It's not a lot, but it's something. But if you look at it from a bigger picture perspective, we're still dealing with a downtrend, right? The price is creating lower and lower highs, and obviously, as long as we continue to trade lower like this, I see no reason why we should be bullish, at least not yet. Eventually, they will bottom out. But again, I still think this is going to continue to be bearish. And, below this high here, which is 6,805, the trend is bearish. And I suspect that the market will try to roll over, and pretty much where we are, and then move to the downside in the following way. Obviously take out that high, then this here, and we can start to consider the bullish side. Here's the price of crude oil, and another good example of trend following. So we talked about selling here, we said sell here, we said sell here, and then I said probably up here people are gonna sell as well. But we didn't actually have the opportunity. Actually, I didn't say sell here. Actually, that level was, I think it was a little bit higher. It was here somewhere, but we didn't actually touch that level. We had 1-2 entries on this latest downtrend, and today I want to maintain a bearish bias, and I think we can lower it a little bit to maybe 12.65. And I think if the market would swing up to 12.57, I think the market is probably going to continue to trade to the downside from these levels. There's nothing wrong starting to book a bit of profit. We are very close to touch the target level. I talked about 12.50 when we're trading up here, so we already touched that. So it's not the time to be very aggressive. It's better to take a step back and actually lighten up on positioning. Here's crude oil, and crude oil rallied substantially on the back of comments that the U.S. is trying to push its allies to not trade with Iran, and that caused crude oil to move to the upside because of the issues that people would need to go and buy crude oil somewhere else. Even Donald Trump himself put a tweet out that he had talked with the Saudi Arabians about increasing crude oil production, and that crude oil prices were too high, but this was later sort of denied by the Saudi government that they're looking to increase crude oil production by, I think it was 2 million barrels per day. Anyhow, I'm not an expert on sort of crude oil microeconomics that I know how much this could push to the upside. And the same guys that are going to give you that view and that information, maybe they'll give us information to how much this should be up higher if you get rid of the oil from Iran. But the problem with the same guys that are going to tell us how much it's going to go up is that these guys usually have extremely long-term forecasts. They have like, the average crude oil price is going to be 66, and then that's going to be sort of the average price for the next year or two. And it's usually like that. It's very sort of backwards looking, sort of where have price been, and let's make that the average. That's sort of how they operate. They don't actually give you anything extra. That's what I noticed, at least. The general crude oil analyst, not everybody, of course. Anyhow, what can we do here? Well, treat this like any other market. So do we want to buy at the highs after such a rally? No. I think if we are going to do anything here, yeah, let's look to buy, but maybe wait for a pullback, maybe back to 70 at least, or let it consolidate, and then we'll look for a bullish breakout. I think that makes more sense than looking to buy at these highs. Now this is the German DAX, and the German DAX is tricky. I even shared a little idea here. I said, well, if we go up here, trade's probably going to sell. And I did that last week, and then the market actually got me stopped out literally the same day. If I would have traded that is. It's not a favorite market. It's nothing I'm trading right now, and nothing I have traded for quite some time. In fact, I was quite optimistic on the push to the upside here, and that worked out fine. I was also very optimistic on the decline here, and that worked out fine as well. However, since we sort of started to trade sideways here, I noticed that my analysis doesn't work that well. Why? Well, because the whole market is just trading sideways, and it's something that should be left to people that trade sideways markets. This is not the ideal sort of market for my sort of strategy where I look for bullish moves. You don't have this here. In fact, this market has been trading sideways here for more than a year, and it will be a great opportunity one day when this market either takes out the low here at 11,707, or when the market takes out its high. And I would bet this is going to be on the upside because we're dealing with an overall strong economic environment. And last time I checked, most of these companies that operate here do well. Of course, not all of them, but in general doing all right. So with that in mind, if we take out the high at one point, that would not surprise me. So obviously, if you're scalping and things like that, then you don't even need to listen to me. If you're doing it good, then and you're making money on this sort of conditions, then yeah, just keep on doing it. Obviously, I'm gonna be short-term bearish below this high, but if you're struggling with this market, then do what I do. I haven't touched anything. I haven't held a position here for months, really. And here, trading-wise, or sort of analytical-wise and outlook-wise, is again have not had a strong view for quite some time. And what else? Well, these are the markets we usually cover, but you probably notice it. You have a bit of weakness in the metal sector. You have copper that slid below, I think, a 1.5 year range, slid below that support level today. You have the New Zealand dollar, which I also shared here in the technical analysis section, which is doing all right. Let me show you that if I can find it. So the New Zealand dollar is really something I suspect is going to continue to underperform, even though it's extremely oversold. But in the long run, I think it's still... Sorry, there's so much content here that... Here. So this is an idea, actually, a setup I shared a long time ago. But I did it again here. Published this on June 27th. So this is the weekly chart of New Zealand dollar versus the USD. There's different ways of looking at these. People call this a complex head and shoulders. This being left shoulder, this being right shoulder. this being sort of the neckline. And I guess from that perspective, we haven't necessarily breached the levels, but from a horizontal perspective like that, I'm just treating this like a range with a break to 67.87 being bearish, and should technically open up for decline to 61.35. We are below these levels right now, and hopefully that continues to trade to the downside. If we take a look at the New Zealand dollar itself, I'm bearish as long as we sort of stay below this range. I know we're correcting, but sort of the first level you can watch is the high here from the 28th, which is Thursday last week. But I'm gonna remain bearish, at least for now, as long as trade below 68.59, which is a high here from Wednesday. So that's something to keep an eye on. Okay, let's see if we have any questions. So we got a question here from Mr. High, and he asks, how often is the sentiment updated a day? So right now the sentiment index is updated on a daily basis. By the end of the day, more or less, I think it's about 10 p.m. London time. There's no real point to update this more frequently. You could if you wanted to. I know, well, the broker I used to work for used to update it more continuously, but the sentiment positioning, it is a very slow moving thing. It takes days for it to change. It can go slowly in one direction, but it doesn't flip. So there's really no point checking that out too often. Once a day is enough. In fact, I check it out every third day or something like that. On the tools, you have sentiment. We have as well correlation studies and forex volatility. Now, these indicators were not properly set up in the past, but they have been set up now. We have better data feeds. There was limitation how much data we could show you before. So this gives you the sort of volatility. This is universal time. So this is GMT technically. And you can see here how the market is sort of trading, like the volatility per hour over the day. You have the correlation study. There's small markets to it, but we couldn't fit them all, so we need to add another little section here so you can choose. But right now you have all the main pairs. You can change it like 30-day, 60-day, 90-day, as low as 5-day. It's closing prices. And this is the sentiment. So this is the sentiment tool. And it's useful to sort of validate breakouts in your trading system. It's also useful to validate breakouts, see if you're trading with the trend or not with the trend. So usually, for example, like the New Zealand dollar versus the USD, like here, well, actually it's not going to help us too much this time, but the New Zealand dollar here, most people are apparently short according to this. So that's actually a warning sign that we probably should not be too short this market, because usually if it tends to be the opposite. So for example, here the euro, is in a clear downtrend, and 69% of traders are long, right? So it's a good indication that the market should probably continue to trade to the downside. And it's the same here with the pound dollar. 59% of traders are long. This is the average retail trader, and the average retail trader is prone to, again, buy against the trend. So when it goes down, they buy. When it goes up, they sell. The only time the average retail trader tends to get it right would be if the market is trading sideways. So, for example, GBP USD in the past, when I think here in 2011 and 2012, 2013, you had the market sort of trading a bit of a sideways to some extent. And here, they were buying, the retail trader was buying at the right time. So you could buy with the retail trader and then sell with the retail trader. But then here, from pretty much this point onwards, the market started to trend higher. So they traded shorted as they done in the past, but then they remained short, even though the market was heading to the upside, like that. And then the market started to move downwards. They started to make a bit of return, but then they said, all right, let's buy. So they were literally short for most of this move to the downside, like that. You get it? And then I don't remember how it looked like here, but most likely long and then short and then probably long again. So there's certain occasions when the market is trading sideways when you can go with the retail traders and sometimes not. Now here, for example, with this one in particular, the issue with, say, maybe the data feed we use here is that maybe we have 1 or 2 big clients that are skewing prices. I mean, they're short, and that sort of potentially influences this measure. So sometimes what I do when I see an outliner like this where it doesn't add up, I would just double check with other brokers and see how they're positioned. But most likely the other brokers are going to show that people are long. I think that will be the natural thing. And then, you know, euro dollar people are long, pound dollar people are long as well. So it's quite, and I think Aussie dollar, well, actually 50-50. So, but at least the 2 big ones, people are long. So I think it's quite unlikely that it's actually, that on the other brokers, you're going to see that people are, a majority are short. Okay, let's see here if we have any more questions. Okay, so no more questions. So we're gonna wrap things up. Guys, thanks so much for joining me this morning. Don't forget to share this page with people that are interested in trading, and to like the video. And very straightforward to do that. You click here, and then there's a little like button down here. As well, we do have some webinars coming up, so don't forget to check them out. Nathan uses moving averages quite often, and he's hosting a webinar on this this Thursday at 3 p.m. London time. Okay, guys, have a good day, and I'll see you guys tomorrow at 9 a.m. London time. Thanks.